Okay, so in this video I would like to explain how to evaluate new money flow, and it's not really new information, but I would like to explain it again from a slightly different perspective because it helps people. Okay, so as I say, a position bar is not a position bar. We do not simply trade against the latest flow. Okay, we do not do that. We do not just wait until short is coming and then we buy, or long is coming and we sell. We understand the context. That's market causality trading. And I posted a screenshot of pound yen on the forward chart, and I hope it explains that very well. Okay? So what's going on here? In this mode here, we have a squeeze on the forward chart. Yeah, shorties are caught, and now new shorties come in. The market is sensitive to any shorties if a squeeze is existing or emerging. Yes? Because those short positions fuel the squeeze and the up move, like here, resulting in a failed forward reversal. Yeah? So the tolerance of the smart money against the dumb money longies is high. If longies buy in such a scenario, the green bars, they are even allowed to win. Okay, understand that point. Even if it's a single big PB, okay, and it's high on the scale, 40, 50, it can win. Yeah? And if red bars come in, so shorties, of course the market will be quick to react to this. All right? However, in the second scenario here, we have a situation where the market is sensitive towards a dumb money switch. Because look, we see the yellow area of the net loss indicator. That means some longies are already into profit. Okay, the high has been taken. We are at the upper forward reversal band, and now shorties leave the market, so get kicked out or take a loss. So we see the collapse in the squeeze line. And new longies come in who are willing to buy expensively into the market, thinking, come on, it came up, so there's momentum. So in such a scenario, when the shorties leave and new dumb money longies come in, while already some longies are into profit, the market is sensitive towards the dumb money switch. So towards the longies in this case, okay? That's very important to understand. So like I wrote here, net loss mode, the market is sensitive to a dumb money switch. When dumb money shorties leave the market and new longies enter, this while some longies are briefly led in the profit, then the market will be sensitive to the dumb money longies. These then eventually lead to a full forward reversal, especially if the major stops, highs, lows have been cleared, or day chart moving average stops. Yeah. So if you understand the difference between those two scenarios, you are in a position to quite well evaluate the meaning of any new position bars on your charts. Okay. We understand where we are in terms of for our channel. We know where the day chart, moving averages are, etc., the LTS. And that enables us to understand what will happen next on the 1 hour chart and below. Okay, the market causality approach is a multi-time frame analysis approach. All right, we take into account the fractality of the market, and we also take into account the particular time frames, because it allows us to reach a very high strike rate and high win-loss ratio. Okay, so please do not confuse those different scenarios. Okay, because you will see sometimes that some new positions are allowed to win. Okay, or old positions are allowed to briefly get into profit and manage to close them. Yeah, they are within the dumb money tolerance. Remember what I explained beforehand. Sometimes you see that stops are left on the table. Okay, because the market is in a different mode. I've explained it in the other video I just made before and posted today. Yes. But when you identified the right market mode, okay, and you also know what's going on the forward chart, yeah, whether the market is sensitive towards longies or shorties, depending on what's going on, what the context is, then you will be in a position to very well decide, okay, now I can go for an inner range MTS trade. Now I can go for a reversal trade. Or now I can even go for a failed reversal trade and trade into the squeeze. Yeah. This is important, and I hope this is a bit clearer now. If you study the video course, these things are explained in more detail, but sometimes it makes sense that I take a particular topic, okay, and I give precise examples to explain the topic again, and maybe with slightly different language that helps sometimes some traders to better understand these things. And yeah, so I hope this short video will help you as well. Happy trading.